All right. Raw thoughts. Let's start off with you, Neil, on that call. What do you think?
I mean, as predicted, right? Not that many analysts asking questions. We got two questions, one and none answer a bit, in my opinion. With regards to the bootcamp conversion, I was hoping they could tell us a bit more about that, but they just repeated the numbers we can read ourselves, which, okay, fine. I'll be disappointed there. But overall, it's about, again, explaining what Palantir does. I'm surprised some of the people in the chat were surprised by Alex Karp's speech rant. I mean, it's one of the only tech CEOs, one of the few, let's say, that actually has a spine, that doesn't shy away of saying what he thinks, what the mission is. You have to respect that. If you don't, then Palantir is probably not the company for you, because they do deal with government. That has been the core of the business for quite a while. So yeah, it was more about, again, saying Palantir is crushing it. You can see it in the numbers. Yes, some of the things with commercial are going to take some time, the recognition, etc., etc. But yeah, nothing that would make me sell any shares anytime soon.
Arnie, give me your thoughts. Stock's down about 5%. We heard Karp say a lot of things. What did you feel about the call?
Why should someone sell the stock after these results? Apart from
Arnie, you have a bit of an echo. Do you have two mics open? Close one of your mics.
No, it's your audio too loud.
No, mine was muted. Okay, go ahead.
So why should someone sell the stock after these results? Apart from him being greedy before. I think the natural progression of this company is very clear. Like, while previously we had the business risk of, we don't know if the revenues will ever accelerate again. I think now we are evidence of the company not only accelerating, obviously I would love to see more, but putting all the seeds that are needed to keep growing more, while also finding a way to actually grow very efficiently. I particularly liked the fact that Karp underscored many times this idea of a rule of 40, where Palantir now has a rule of 40 score of 57%. And maybe it could be helpful to underscore actually what is that. That is essentially the key metric with which you assess the health, the strength of a SaaS company, so a software business, where the idea is if you grow much, you are even allowed to have like a thin free cash flow margin, because the rule of 40 basically tells the idea is you sum the free cash flow margin and the revenue growth, and the average company in the SaaS world tends to have a rule of 40 of 40%. That's the name, that's where the name comes from. But if you are able to grow more, let's say at 60%, you can even have like a zero free cash flow margin, which is still great. Typically, the combination is 20% growth, 20% free cash flow margin. What Palantir is doing right now is the impossible, also underscored by Karp. Why? Because essentially now they are accelerating, and in a normal stage, in order to accelerate, you need to spend more in marketing, while actually Palantir is spending essentially the same amount of marketing, but the business is accelerating, which means the margins expand, which means this rule of 40 is improving. And what makes me think is, I don't think neither we are at cap level now. I think Palantir can even go beyond by keep leveraging the bootcamps. And from Karp himself, it seems, yes, bootcamps are great. They're doing great, but we are not fully at full power yet. So there was like an awareness of, yes, we have improved much, but we can do much more.
Yeah, especially, I mean, he said there were way early days to get their customers to buy their products. I mean, that's where the partnerships with the hyperscalers comes in, maybe a bigger sales force. Revenue per person was up 20%, which again is great. All of those metrics are great, but I mean, at the end of the day, you do want your salespeople to sell the products. Over time, we know it takes time with Palantir. We've known that for quite a while, even though some of these cycles have become extremely fast. I mean, 7-figure deal after 5 days, quite fast. But of course, specific deals, you want this to be on a larger scale.
I think it is very important what Carp mentioned about educating the market. Since all the market now is focused on AI models, and Palantir is not providing AI models, it's providing infrastructure, I think there is a little bit of skepticism because they're essentially selling something that is more useful, but is different from what is generally perceived to be useful. So Carp mentioned all these bootcamps, even for clients that maybe don't fully convert immediately, at least they set the standard. And Palantir wants to set the standard to be the standard for this market. Around the government side, he mentioned something that was really important in my opinion. Initially, they did the same process. They had a valuable product. They needed to educate the market. They spend a lot of time showing what they are being able to do. And it took like 5 years before all the customers the potential customers that could have purchased the product actually did it. So let's say now we have made more than 900 bootcamps, they said in the slide. We are at 400 clients more or so. So it's like there are still a lot of customers that just tried the bootcamp. They will try to find a way to make something on their own, but eventually these clients will come back.
Yeah, I agree. Chris, I see you in the chat. I'm just going to give my thoughts real quick on earnings. Then we'll have Chris join live. He couldn't join right before the call, guys, because we were like 5 minutes before the call, but he's going to be sitting with us and giving his thoughts on earnings as well. So my quick thoughts. It was really interesting. I think as soon as the call started, Carp, it was almost kind of like he saw the stock, right? Like someone showed him the stock right before he went live and he was a little flabbergasted. And I think there was like a visible kind of like gasp that he had. And he was like, well, we crushed it again, but it was kind of like, well, I don't know why the stock's not reflecting it, but we crushed it. And I think people have to remember Carp is a founder before he's a CEO, which is why even at the end, he was raw and honest and said, look, I have money. Everyone at the table has money. We're not just doing this for money. We're doing this because we genuinely believe in the purpose and belief in the mission. Sham Sankar, the CTO of Palantir, was their first forward deployed engineer. Alex Karp convinced him to join the company at a French restaurant by painting him some analogy of how the restaurant operates and how everything has a symbiotic relationship. What if that could happen in a tech company? And that's how these guys ended up working together. So for them, it's a monumental achievement. And I think it's just something we have to recognize as, from their perspective in terms of how they're thinking about earnings. I see a lot of comments here, people saying, Palantir cold to this, that, you're trying to make excuses for the numbers. I really struggle to have sympathy for those arguments. I think a lot of those arguments or those comments are rooted in ignorance, because at the end of the day, I'm not seeing numbers that are showing me a deacceleration of growth. In fact, I'm seeing the opposite. And I'm not seeing numbers that tells me, oh my God, this company is overhyped, they're overselling themselves. Even the analysts, Mariana and Dan Ives, two very well-respected analysts in the community, they started off their questions by saying, hey, we can see you guys have a ton of demand. We want to know how you're capitalizing on the demand, but it's very obvious that there is interest for the company itself. So I think that makes a lot of sense. And I think Carp had a really good monologue in terms of what they're trying to do to capitalize when it comes to AI. The one thing I will say is Dan Ives asked a very specific question, which was, can you tell us a little bit about the conversion on the customer count? I don't think, and this is, you got to understand the politics and psychologies of companies. Carp's not going to say, oh, we're converting 10%. We're converting 20%. We're converting 30%. Like, they can't give away that number. That number is a very private number to them. That number probably is adjusting every single day. So I know a lot of people in the chat were saying he dodged the question. Yes, they definitely dodged the question. They didn't give the exact number, but there's not many companies in the world that are going to give you the exact number on their exact conversion, right? To be able to make their numbers. However, the 69% customer count growth in commercial is at least a byproduct of the overall demand growing when it comes to the US commercial space. And so I think that demand is getting higher and higher. The conversion is getting better. Carp even acknowledged, yeah, our sales motion is not the best, but we are capitalizing on the demand that's coming in. And once we really accelerate our sales motion and really get that working correctly, then that conversion is probably going to get closer to 30, 35%. I would guess right now it's close to 10%, given they added 50 customers. They did 500 boot camps, right? So that's my basic kind of rough guess on Palantir. All right. Chris is with us as well. Chris, thank you for being here. You are here now live with us. What were your thoughts on earnings?
So first and foremost, I just want to say, I thought earnings were okay. I mean, I think a lot of times expectations they get a little ridden too hard. Right now, your guy, what is it down like 3-4%? You're up 8% on the day,
Yeah.
40%
Yep.
in like year to date. Like, what do you want? You know?
I agree.
So people really have to recalibrate themselves a little bit. And the thing is, like, when you bring this up, people are like, oh, you're just a trader. Like, no, it's not about being a trader. It's about realizing that sometimes the market overvalues things in the short term, right? And that doesn't mean that the long-term thesis is broken by any means. It just means in the short term, things have just got really, really heated in a very short period of time, and that you should be, a little bit more cautious. So I think overall, the company is doing very well. Long-term growth trajectory is now moderating, but that's healthy. That's how things are supposed to work, where you can't have year over year 100% growth every single year. That's just impossible to do. So you have to take that into consideration. And what's good that I like about these earnings that maybe some people don't like is that rule of 40. If you go to that slide that showed the rule of 40, that is what a healthy company does. Where
Can you explain that for people? What is the rule of 40 for those?
Right. So you're supposed to take the growth rate and I think the operating margins, and it's supposed to stay over 40%. That's what dictates a healthy SaaS company over a long period of time. So if you see those metrics starting to not to drop off, then you got a problem, right? This
Right.
company is clearly performing in the right way. So that means that it deserves a premium valuation. Just maybe not the biggest premium that you can possibly have. So I think right now Palantir is in a good shape long term. People are going to do very well in this stock, especially if your time horizon is over 5, maybe 10 years. But the one thing I will say is the phase of hyper growth is over for Palantir. So if you go back to its quarter over quarter and year over year numbers, you can see that now growth is moderating at about 20% per year, which is good. Don't like that. People have to realize 20% year over year growth, and you can compound at that gives you amazing returns. Growth rate plus profit margins. Yep. So I think overall, people really need to stop being really super bearish on the company. You could be bearish on the stock price. I mean, that's more normal than people want to believe, but that's what happens. Sometimes the value of a company rides way higher, like the stock price rides way higher than the company. But I think the fundamentals are really strong. Would I buy Palantir at today's prices? No. I have
Why?
a friend
Why?
because the valuation doesn't make sense. It's too high, man. Like your growth is slowing down, and the sentiment right now is too strong, which means that the expectations are a lot more elevated. You typically want to, this is where I get a little bit frustrated when it comes to investors, where they completely forget the one cardinal rule that everyone needs to remember, and that is very simple: buy when there's fear, right? Sell when there's greed.
Yep.
Literally, we are in a moment of greed right now, and earnings basically didn't come up as good as everyone wanted. So now everything is getting sold off. It's like stupid, really. So the key is wait for people to get really bearish. Wait people to say, you know what, this company's not growing anymore. Fuck this. Alice Karp's an asshole, blah, blah. Then you buy the stock. And then when people say, oh my God, Palantir can do no wrong, and everyone just is going to be using Palantir, and this is going to be a $5 trillion company by 2030, that's when you should probably sell, because every idiot and their mother is just pumping the stock.
Or at least not buy aggressively, right? If you're long term, maybe you don't sell,
Yeah.
but you definitely don't. At 25.50 today or whatever it was, maybe you don't load the boat.
I mean,
Right.
dude, this is like TJ's wet dream, bro. This stock is easily one of the best companies to trade in the market right now, because it has such a big retail following that bids prices up and then sells things off without any idea of what's actually happening, and basically gives you these crazy premiums on either side of the equation. So I would say to people, the best way to make money on Palantir, if you want to buy just the stock and hold it for long term, you're going to do absolutely fine. I don't doubt that for 1 second. But if you really want to juice up your returns, bro, trade the shit out of the stock. Sell calls,
There's a lot of money in option selling.
sell calls, sell puts,
Chris,
manufacture.
what are your thoughts on this customer count? How do you feel about this slide right here?
I mean, eventually it's going to slow down, right? It's hard to keep adding customers because there's still a limited number of companies that you can tap. The other thing is, when it comes to IT spend is going up, which probably means that there's something I don't want to say something wrong with their sales process or wrong with the product, but adoption rate maybe slowing down is probably something that that's not good. And this is something that Carp brought up on the call, which kind of intrigued me a little bit because, if the product is really good, it's like a restaurant, right? If it's a great restaurant, there's going to be a lot of line. There's going to be a huge line outside. So if you see a restaurant and there's not a lot of line outside, that doesn't mean that it's not a good restaurant. It just means that maybe the demand is not as high as it is. Now, in the future, these boot camps could provide tangible value by having returning customers who will go out there and explore things. There may be something to say about the price point of Palantir being a little too high for what some companies are willing to pay for it, and saying, you know what, we understand that this is a really good product, but the amount of money that you guys are trying to charge is a little bit too high. And I mean, if you look at Palantir's margins, the margins are freaking amazing, which means that they're probably like not really giving a lot of discounts to people. So, they're no longer in the phase where they're sacrificing margins for growth, and that could be slowing down customer adoption. Now, that's kind of the opposite of what Snowflake is doing, where I think they're a bit more, generous with their terms and saying, hey, listen, we want to get you on board. So these are the kinds of business decisions that are being made in the background that, we don't really have too much privy to. But overall, I think the trajectory for Palantir is a good one. I do see some underperformance for the rest of the year because of this light guidance, which means that I don't doubt this company getting back to the 20s, maybe even the high teens. But yeah, I mean, dude, everyone's going to have downgrades the next week. You're going to see downgrades for Palantir. That's it. Because the thing is, like, they guided for lower revenue than what the market was forecasting. And so once you see those downgrades, some people may take a step back, and we'll see what happens there.
All right. Any other thoughts, Chris? And then we'll get back to it. Anything else you want to say? I'll put Chris's Twitter. For those that don't follow Chris, he's a good friend of mine. He's analyzed Palantir for years now, and he understands the company pretty well. So I'll put his Twitter in the description. Any final thoughts you want to say, Chris, on Palantir?
Yeah, congratulations to my HIMS boys, bro. I bought a crap ton of calls this morning.
Good.
HIMS was over. The problem is, this is the one thing I just want to reiterate. Earnings are meant for traders, not really investors. And the reason why I say that is because nothing in earnings is fundamentally going to change the course of a company that directionally to basically decide whether or not the company should be valued 10 or 20% higher or 10 or 20% lower.
Yep.
So the thing is, if you're think of earnings as a report card. It doesn't mean like if you get a report card, you should be like, oh, you know what? You got a bad score in the third grade. That's it. You shouldn't even go to fucking fourth grade anymore. You should just, that's it. Quit life. Find a factory job. I think so many people do that. And it's retarded. It's like, look, I just got a bad test score in math in the third grade. Give me a break. I'll do better next year. So just think of it that way. So I think a lot of these earnings reports, I'm becoming a lot less concerned with earnings, more concerned with, okay, what is the report card and like where are the improvements that need to be made and what kind of responses is the CEO getting and how are they dealing with some of the macro level impacts, and then seeing where things go from there. So earnings right now, I personally am not a big fan of doing short-term options up and down. I'm more of like, hey, I think this company's headed in the right direction, buy some leaps, call it a day. And that's the way that I would approach it.
I love it. Thank you, Chris. Chris's Twitter is in the chat. Please make sure to follow him. And Chris also has a Patreon. You guys can check out his Patreon as well. A lot of good value there. And Chris, I will talk to you later in the week on Finance Junkies about Palantir.
Sounds good. Take care, guys.
Thanks, Chris. Arnie,
Well, I think Chris brought many interesting points. I generally agree with the idea of you should better, like if you're focused too much on earnings, you'd better trade it rather than investing in it. But because the priorities change, like for a trader, it is important to have like the big spike in relatively little. For investors, what really matters is the fundamental direction of the company actually improving. So each earnings call is like a check where we say, okay, is the thesis going stronger each quarter or not? And I think I'm confidently say that this quarter we have further evidence that our thesis is right. But there is one thing that I really disagree with Chris on, which is from Chris' perspective, everything seems to be already at the top at a fundamental level. He expects customers to decline in terms of acquisition. Probably over the or year-on-year comparison, it could be even true. Yet I think it doesn't really capture what is happening right now. Palantir is generating more or less $2 billion annual revenue with so few customers. And just now, they're learning how to capture more customers, and we have evidence of them capturing more and more customers, which could potentially improve a lot still. And now we are at 500 customers or less, and Either Square was showing me that there are like $6 million employer firms in the United States.
Only in the US. And he said that you can only grow so much in a period of time. I mean, 500 something companies is not near the top, of course. I mean,
obviously, this
wants to capture everything.
So this is obviously the biggest numbers out there, considering also mom shops. But just for our reference, companies like Snowflake, ServiceNow, they have like 5,000 clients, and Palantir has like 1/10. So, and Palantir is now learning how to capture clients. So I think we are actually at the beginning of the tornado, not at the end of it.
Agreed. I mean, I can understand the comments on the stock, and Chris was perfectly correct on that. Stock ran ahead of itself. Market will not buy things that are overly expensive anymore. This is in 2020, so you have to respect that. Even with all of that, the stock is still up 40% year to date. So enjoy that. Then, with regards to the customers, he did put the analogy of the good restaurants, right? I think Palantir is the good restaurant. I think there is plenty of people inside the restaurant, just not enough people serving the good food. I think we're going to see that in the future with regards to the growth in customers. I mean, right now, what is it? We had 900 boot camps, 500 customers only, 600?
Yeah.
600 boot camps, and right now only 500 customers. So, I mean, I don't think the top is even close. But again, sales needs to happen. They need to close more deals. We need more information, etc., etc. But overall, I mean, thesis is intact. 20% at minimum growth is quite good, in my opinion, especially at these profitability levels. So, yeah.
Yeah, dude, if this thing drops to 21 or below 20, I'm buying more. Like, it's just like, this would be none of adjusted operating margin increase. U.S. commercial customer count expands, or growth expands. Customer count in general, 44% year. Like, I don't see the numbers that are bad. I'm trying to be very objective here and try to see why the stock is down. And here's the simple answer. And anyone let me know in the chat if they disagree with this analysis. Stock was up 45% year to date as of today, 8% on the day. It's just like, unless you are NVIDIA and you just have the data center revenue that's like going to just keep going on forever, you're not going to pump on that. It's going to be very difficult to pump when you're up 45% year to date. Palantir increased their market cap by almost 50% this year. They added $20 billion. Like, it's hard to add more and more dollars there. It's a market. There's going to be liquidity. People are going to take profits. So I don't think the numbers justified a 10, 20% run, because we already had basically a 50% run and a 10% run on the day. And I wouldn't be surprised if in the next coming days, just like Coinbase fell 5% after they went up 10% on earnings, and then Coinbase pumped up to 234 today, which is basically like a 6% pump from where they were on earnings. I wouldn't be surprised if we see Palantir back at $25 in a couple of days or at 21. But the numbers themselves, I think, were pretty strong. CodeStrap says guidance is the reason. I agree with CodeStrap as well. And this is where we have to ask ourselves, do we think that guidance will continue to expand? Because, I mean, look, in Q1, you're not supposed to say, yeah, guys, we're going to grow by 7 percentage points more than what we told you. A, because Palantir probably doesn't have the data to say they can do that, or B, they just aren't growing that much. So in the coming quarters, do we think that's going to happen? If you think that is, then, you know, for a stock that's already up 40% year to date, they can increase the guidance. If not, it is still up 40% year to date, and it just won't go up any higher than that. Maybe it goes to 25% year to date and it drops another 15%, but it's still going to have a pretty strong year to date return. Just a question of if that guidance can increase. Arnie, go ahead. Or Neil, then Arnie. Go ahead, Neil.
Yeah, and I did say that Q1 is a seasonally weaker quarter, and still they crushed it. Plus, again, it's an election year, so even though we see government reaccelerating, it's an election year. I do expect the government side of things to get quite a big push, maybe towards the back half of this year, next year for sure. So don't forget about that. Plus, I mean, it's a very, very quick earnings call, right? Only 2 analysts to ask questions. Other software companies have plenty of other analysts asking questions. So now we're just waiting for another 3 months until we get more information, plus all the great information everybody finds and shares on X. But yeah, just don't look at the stock, because let's face it, a stock like this, a company like this, it's a $50+ billion company, generates just under $3 billion in revenue each year. It is expensive. Plus, why do you want the stock to go up so much right now? Do you plan on selling tomorrow? No.
That's a good thing. I'm happy you said that, dude. If the thing went to $30 tomorrow, some of the people that consider them long-term investors might get really short-term to take some of those profits. And, you know, that doesn't give you enough time to build out a position. And if you want to build out a position over the next 10 years, then you kind of need the stock to be a little bit lower. Arnie, go ahead.
No, I was just noticing that every time they give a guidance, typically they beat that guidance by 1-2%. And actually they beat the guidance they gave for around 4%. And they guided actually something better still, like in the 22% year-on-year range, which is disappointing maybe compared with the price implications, but that was already above what everybody was expecting. And analysts were expecting and are still expecting for the coming years a revenue growth of 20%. So what we are seeing here from an analyst perspective is maybe the guidance is not extraordinary, is not that guidance like NVIDIA, but if analysts were already starting to appreciate more the Palantir story, as a reminder, there were 2 analysts, so Citigroup and Jefferies, who were very bearish, and entering the last quarter, they essentially moved their target price from the $13 range to 23, 24 after Q1. After this Q1, they have further evidence of revenue accelerating, margins expanding, which actually back those numbers. Probably the numbers are good, not good enough now to make a further jump. So probably we just need to digest a little bit more to have further confirmations to say, okay, now we are ready to go and strike to 30. Because also for the $15 to $20 range, it was a process. It took like 6 months of the company growing into the valuation until they were like enough substance with which, when the numbers were out, wow, these numbers are actually too strong compared with the valuation I'm paying. Now the valuation is very rich, the numbers are very rich, are very strong, so there is no real discrepancy. So it is reasonable if the stock stays in this range. Now, if you are an institutional investor investing in AI, why should you sell the stock now?
It's a hell of a question, right? If you're an institution, I actually just had an institutional fund manager. He manages, I think, 50 to 60 million bucks. He just texted me and he was like, this is a great quarter to me. This is a guy managing a decent amount of money. He's like, I think this is a good quarter. I don't know what people are freaking out about, right? And so I would imagine the toots that want to fill up their positions, I think it would be magic for them if this thing goes below 20. I really think they would want this thing to go below 20. And I don't know if it gets there. It's down 8% right now, but we'll see. I don't think there's a big reason to sell if you're an institution like that. And that's a really good point, right? If you're an institution, you're unemotional, right? You're not like, well, I'm going to give the company a chance. It's like, no, if something's wrong, you're out, right? You don't care, right? We see this with Tesla, right? Like it's just not working. All right, we get out of here. And that gives retail the advantage, right? I don't know if you're an institutional money manager, what are you seeing outside of guidance, not going down, just not going as up as you wanted, for you to be like, yep, I'm out. Palantir is a busted story.
I mean, at worst, you are less excited, but I don't see anything that could potentially break the thesis. While 2 years ago, every earnings call were like, oh, we are so close to get something really bad. Like, okay, the thesis on this company is not working. I think we have plenty of evidence that the thesis is really working, especially in terms of the client acquisition side. It's just probably not we. Like I think the overall price was implying more, because our expectations are, yes, there will be like a gradual acceleration toward the 30%. I think it is absolutely possible once the US commercial starts having a lot of weight. And I personally don't think we will really see a deceleration with scale, but we will actually see a moment of very strong acceleration in customers and revenue, which is like when you enter the scaling phase, because you are appreciated as a standard. And that's it.
We got TJ in the chat. Only people who are mad are short-term call option buyers. Dude, me and Arnie, I'm not gonna lie. We were on the market open together, and the thing pumped 8%, and we were like, dude, if you got some options expiring next week, get out of those shit, because it's just hard to hold these things going into earnings, right? It's very difficult. If you're doing that as a gamble for a couple $100, whatever, but if you got some sizable money on short-term call options, it's literally putting it on black or red, right? And if the stock pumps in the morning, it gives you the pump you're looking for, you might have to get out of it. JL says the stock ran up before earnings. Of course it would sell today. Relax, people. Yeah, I agree, dude. I think that's the case. Neil, go ahead.
Yeah, no, I mean, if nobody here was looking at the stock price and they would only listen to our conversation right now, they would think they missed completely. Everything is down. They're losing customers. It's not a profitable quarter. There is no buybacks. I mean, it's a complete shit show. Excuse my French, but it's not. It's a very good quarter. Just the stock has run up too fast, and that's about it. The expectations from analysts were 20% year-over-year growth. Now you're getting 21, 22%. Ooh. Ma che cazzo fai?
Oh boy. Yeah, I agree.
Well said.
Thank you, brother.
All right. I think we ended off just with a little word about the community, as we always do. This is a very fun thing to do every 90 days. Very exciting. I think we had 6,300 people here at the peak. So means the world, you guys spending time with us. Look, as retail investors, first of all, one thing I will say, Arnie and I, have been seeing this a little bit more. It's like retail investors are starting to get a lot more respect because of the analysis they can put out. And I think these companies nowadays, whether it's a Palantir or a Robinhood or these kind of not B2C companies, but companies that have either B2C products or a big retail investor base, they recognize that the days of just selling to JP Morgan and Bank of America are gone. Like, people want to know your story, and to amplify your story, you need to have an audience that's engaged. And to get an audience that's engaged is very difficult. And, sometimes retail investors are a little bit more creative with how they get people to care about ideas, thoughts, and opinions and analysis. So we just really thank everyone for showing up to this call, because it's not easy to have people in one place and care about our thoughts and opinions and our ideas. But I think a lot of people hopefully get some value out of it. And today was one of those earnings where the stock fell after being up heavily. But I'm sure there will be many earnings in the future where we will keep doing analysis, and hopefully the stock will reflect that. Neil, your thoughts on being a retail investor and being along for this journey?
Yeah, I mean, I wanted to share the example, Tesla, for example, huge company right now. Also started off huge retail backing, retail site coming from miles and miles away. Wall Street didn't get the story, probably still doesn't get the story really right now. And you get rewarded in the long run. I mean, okay, I got a bit lucky with Tesla though. When I got in 2019, stock went up like crazy. Okay, fine, we got a pandemic. I'd rather not have a pandemic and not get a 10x. But I mean, even before, if you started earlier, it was red. Company went almost bankrupt. But you kept on looking at the company. You kept on looking at the story. Story became better and better. Financial better and better. then suddenly you're probably a millionaire if you bought back in the early 2020s, 2012, 13. With Palantir, we've been discussing this company when it was high, when it was extremely low, everybody was bearish, slow growth, etc., etc. Now look at us, we're at $25. Stock was not that long ago in a stock market cycle under $10, under $8. As a retail, it's true, you get way more respect today because one, we retail investors don't really have to show our performance each and every quarter to our clients. We don't get paid by anyone, even though a lot of money managers lose money and they still get paid because they spend time on X, but okay, it's a story for another day. But I mean, we have time to research companies. We have time to get our feet wet. And yeah, with Palantir, again, it's stock ran up maybe a bit too fast, but everything else is doing quite well. Plus, if you are a long-term investor, you should enjoy great quarters, stock goes down. If you're a short-term / trader, I can understand why you wanted this to go up so you can get your quick gains. That's also totally 100% fine.
Stock's down about 9% right now. Arnie, your thoughts as being on being a retail investor, part of this community?
Well, I think being a retail investor is the condition to actually learn how to invest. I think the really good investors out there are not the ones that started in managing money immediately, getting fees, but are those who started investing because they were truly passionate about what they were doing, and they managed money only as a way to leverage more what they do, their passion. But eventually, there are a lot of people who, as you mentioned, just talk on X and deliver nothing. So far, I would say, at least this community has really brought evidence that we are able to search for valuable information that is more or less hidden, but valuable, digest it, share it in an effective way. And we were right versus very big horde of experts, both from the technical side, on the software side, and on the financial market side. So our dear retail investors, humble retail investors, actually made it right. And I think we will continue to make it right, because now, differently from who starts studying the company now, our knowledge compounds. It's like an ontology that continues feeding itself with more information. And the better the ontology, the better the predictive outcomes become. So sometimes we can be right, sometimes can be wrong, and sometimes we can have no idea. Like like this morning, like why plus 8%? Well, this is just expectation. What we can do is trying to stay balanced, enjoying the journey, and more importantly, rather than seeking to make money, I would say you're learning to avoid making stupid decisions.
Yeah, and just to go Ether, yeah, you say something too. Yeah.
Thanks. I mean, I really resonated with what Neil said about the Tesla thing, because I began my journey investing with Tesla also, and it was quite a fun ride, and it was full of complications and interesting stories, Elon tweeting and the stock like the stock dropping. So and then I found Palantir, and here I am. So it's been an interesting journey here with this amazing community. I mean, we've met incredible people here.
Physically also.
Yeah, physically. I mean, we've met more than once, and we've done trips, and we've moved, and we met other incredible people that will never appear here on the screen. But this just goes to show that Palantir is an amazing company, an amazing community, and that no matter how a quarter, no matter how the stock drops or goes up after a quarter, I mean, we are here, and we'll be here, and we'll be more next quarter. So we'll be happy and merry, and that's it. Because they keep executing.
One thing to give a little bit of context of how deep the retail investing community is, well, I just want to share this right here. This is some people in the chat might not even know this. Palantir got $37 million from the government of Lithuania. This was back on, when was this? This was March 26, 2024. So this was probably a Q1 deal. I think it goes into effect by Q4, Q3. I mean, dude, this deal I was able to tweet because a guy who lives in Lithuania messages me on Facebook. I don't really check Facebook. I get a little ding from Messenger. I'm like, who the hell is messaging me on Facebook? This guy's like, hey, I'm from Lithuania. I like your content. check this link out. I clicked this link. Thank God it was not, any random virus. It's a link to Palantir, and going through their central public procurement portal, they got $37 million. This was not announced on PR. This was not on the Bloomberg terminal. I mean, this is the edge that retail investors have, I think, because we're crowdsourcing so much information and we're trying to figure out what's actually happening to this company. So when we see the government reacceleration up 16% versus 11% last quarter, part of that is because we're winning some of these deals. It's a small contract, but it's still a contract from a European, from a country across the world, right? The country that's part of the Baltic states. That's what's so exciting about being a retail investor, is just the crowdsourcing of information. And then Palantir does a great job being one of the most exciting companies in the world. As Ether says, as long as they keep executing, this is going to be a really fun journey over the next decade. All right, I think we're out. Thank you, everybody, for joining. Everyone's Twitters are in the description. Please make sure to check them out. Like and subscribe if you can. It would mean the world. And I'll be back later this week on this channel. I'll do a market open for the next few days, and we'll be back in 90 days in probably August for Palantir's Q2 2024 earnings as well.
Almost there.
Almost there. Just 89 days to go. Love you, everybody. Thank you for being here. We'll see you guys later. Bye, everyone. Have a good one. Good night.
Ciao.